Hello guys, this is FX Bright, the Trade Guru. So on this video, I'm going to be showing you guys how to um, trade the W structure. So I was able to cover the M structures in my other video, so you can go watch that. So on this particular video, I'll be talking about how to trade the double bottom, which is basically the inverse of the double top. But there is a little thing I want to show you guys on this video. So please like and subscribe and turn on the bell notification. Like I told you guys previously, I said what's the conventional way of trading the double tops and double bottom is that the price comes down, goes up, price comes down, and as price is about to go up, what people expect from price is that price is going to break this neckline, make a retest, and you buy upwards at this very point. So this is the conventional way of trading the double bottom, but I do have a very distinct way of trading the double bottom and double tops. And I said that for each leg that forms, you have to be able to confirm it. The reason why I said that is because and I'm going to do another video where I talk about the head and shoulder. I do have videos like that already. You can go check my videos and you will find that. But I'm going to talk about something very important now. Imagine let's say price was coming down, goes up, and comes down like this again, for instance, right? Now if price begin to go up, would you trade this as a double bottom, right? If price gets up to this point again, will you trade as a double bottom? So there is a ratio, there is a Fibonacci ratio that I like to use when price makes something like this, because in more often than not, you will see price getting to the neckline and coming back here, and you will have what we call a head and shoulders. So if you don't have a very distinct way of trading the double bottom and double top, anything that looks like this and coming to this place, you will be expecting also a breakout on a retest like this, and you might be disappointed because price might hit this place and still come down. So you have to be able to find very accurate Fibonacci. So for this double bottom, how I like to do it, like I said, is when price make the first impulse move and makes this next move, right, and forms this neckline, I like to confirm this neckline. I have to confirm this neckline to be at least in 32.8 Fibonacci and 61.8 Fibonacci. So I have to make sure the neckline, don't worry guys, I'm going to go to the chart, I'm going to show you exactly what I'm talking about. So when price touches the neckline, I let price comes down. Then as price comes down and is about to go up, at this point is where I begin to find my entry, instead of the normal conventional point where you have to wait for price to break the neckline and makes the retest. My entry comes at this point. So I'm going to show you guys how to find these type of entries and make very good trades. So coming to the chart, let's take this chart for instance. You can see what price was able to do on this part. You see price came down, went up, formed this neckline, and came down to the same point and starts buying up. So what do? You're supposed to understand what this neckline is all about, right? So what I do is that I bring out my Fibonacci and I like to measure the neckline. So I put it from the impulse leg, from the beginning of the impulse leg, and I draw it down, stretch it to the bottom, and you can see that the neckline broke the 38.2 Fibonacci, and it didn't get to the 61.8. but any neckline that breaks the 38.2 Fibonacci is very good, is very accurate. But what I do not want is a neckline that goes above to 78.6 and closes above. I won't call that a good neckline. So as long as it falls between 38.2 Fibonacci, then that's a beautiful neckline. So what the price does is, as the price has come to the 38.2 Fibonacci, I let it, I agree, I recognize that this is a good neckline. So as price begins to fall down, and gets to this point, I'm expecting price to, maybe two things can happen. Is it that price continues the downtrend and I forget about this W structure, but the moment I see price begin to have some buy pressures and begin to go up, then I start to think about this my W pattern forming. So normally, like I said, this is already a price movement that has gone. So you can see what happened in this particular W structure. You some people would have liked for price to break this neckline, make a retest, but you can see that price really didn't do that. So sometimes you have to be able to spot your entries very very early, because the entries will always come, but sometimes they come early, and more often than not, the conventional way of, when price breaks through this neckline upwards and make a retest, sometimes you won't find that retest, but more often than not you will find these type of entries I'm about to show you. So now I measure the neckline and understand that the neckline has broken 38 and didn't close above 78.2. That's fine. So I'm going to delete this particular Fibonacci. Then as price got back to this particular point and start going up, I have to test this point, right? So how I like to test the point is I'm going to draw another Fibonacci from this point and draw it to the neckline, so you can see what I'm doing, guys. So this point, it must go below 61.8 Fibonacci, right? It must close below 61.8 Fibonacci, which you can obviously see price did. These particular candles all closed below 61.8 Fibonacci, but it must not close below 61.8 Fibonacci, right? So anything that goes all the way down to 61.8 Fibonacci, I will consider that maybe a potential head and shoulder, but not the W. And there's a way to trade the head and shoulders, and I'm going to show you guys. So for this video is about double bottom. So I'm going to go ahead and delete this one. So now we can see now, the moment we have been able to confirm the neckline, we've been able to confirm this particular leg. The moment we see price begin to go up. Now, the first way I told you guys how to trade this pattern is, what you want to do is that the simplest thing to do, look guys, you don't even have to make any mistake in trading. All you have to do, if you don't know anything about trading at all, just trade the simple patterns. They are called simple patterns for a reason. And if you can have a very good strategy, which I'm showing you right now, on how to trade simple patterns, all you have to do is just come to the chart and trade simple patterns, and do it for as much trade as you can, and you make a lot of money. So what you do is you're going to draw a line just from the beginning of the impulse leg all the way to touching the neckline, and you're just going to do it like that. Now, how are you supposed to enter this market? You enter the market the moment the price breaks through this line, makes a retest, and starts buying up. Very simple. And now you have to come to the lower time frame. Now this is a 1 hour time frame, so I like to come to the 15 minutes time frame. Let me scroll back to the point, so you can see what price was able to do here. Price broke through the neckline, made a retest, and started buying up. So it's on this retest, so you can see that particular point where price was making the retest was a good support zone. So you can see this particular point, the price came, hit, was a resistance, hit, it was a resistance, finally broke it, came down, and it's making a bounce of that resistance. So from this particular point, you'll be able to take a buy. Now, unlike the conventional way where people would be expecting price to get to this neckline before going up and make a retest, you would have already been in the trade all the way from here, right? So this is a very perfect way to enter the market. Now, another way to enter the market, like I want to show you guys, is you can also find a way to enter if you can be able to. Now listen guys, you don't need to stress yourself with a lot of information if you don't want it. You can just take this one I said and try it as much as possible, and you'll see how you become profitable. But now let's assume, let's assume you want to use another way of entry. Now if you can be able to spot what price is doing in the lower time frame, all you wait for is to trade price in the structure. For instance, if you're able to come to the lower time frame, let's assume this place has not reached yet, maybe price was somewhere here, just doing all these things like that. The moment you come to the lower time frame, you will see something like this, right? This is already looking like another W in the lower time frame, which you could have traded. So if you came to this very lower time frame and drew also for this same neckline, you'll be able to see that price was able to break this neckline, make a retest. Remember, this is also a W. You can see how price came and made this W here. The same way we are trading the big W, we can go to the lower time frame and trade the smaller W. So you can see price came here, broke and came for a retest. On this retest, you could have also taken a very good buy, and maybe on this big buy candle here, you take your buy and you will be in the trade, you will be in the same trade early enough. Sorry guys. So you will be in the same trade early enough. So when the price makes this buy, you take the buy from here, so the other guy can take the buy from here, while everybody in the world who doesn't know how to trade this particular pattern is waiting for the breakout of the neckline, and they might even miss out on this very, very good trade. So how do you take profit on this trade? Now let's go back to the 1 hour time frame so you can see it very clearly. It's 4 hours. Let's go to the 1 hour time frame. So how do you take profit on a trade? What you want to do, like I said, is you're going to put another Fibonacci from this point all the way to the bottom, and I like to take my TP at 88.8 Fibonacci. So just imagine you take a trade from here, your stop loss obviously being below the double bottom, and you're going to take a buy up all the way to 88.8. So you're going to see there's a lot of peeps. You're going to make a lot of money trading like this. And the last thing I want to tell you guys is this: always make sure that where your double bottom is forming is in a very good support zone. So if you look at this particular point where the double bottom was forming, this particular place where the double bottom is forming, if you check history, you will see that that place was a good support zone. It was already price was already making good reactions from this particular zone, right, in history. So you can see, if you stretch it all the way, you can see that this particular zone has been very good for price. So the moment price started forming this double bottom here, already you can tell that this was a very good confirmation for something that was about to happen. So you couldn't have been able to miss this trade. So guys, I hope this was very helpful, and like I said, please like and subscribe, and I'll be doing more videos for you guys. So see you guys in my next video.